Now, especially for a newer investor, I never think it's a bad idea to start off on the Vanguard website, look through all the Vanguard ETFs, and try to figure out which of the Vanguard ETFs match what you're personally looking for. Now, what I mean by that is that there's different ETFs that Vanguard offers that might be more income focused, or maybe more dividend growth focused, or maybe just offer a ton of growth potential with a tad bit more risk. But regardless, Vanguard offers tons of different products that are very cheap to hold on to, with expense ratios basically as low as we see across the entire markets. Now in this video, I'm going to share with you my personal favorite Vanguard ETF, the one that I've been buying actually over the last year or so. This is an ETF that I want to add more and more into my portfolio, especially as I get closer and closer to my long-term dividend goals, because this specific ETF does not only offer income potential, but also a ton of growth potential too. Now we're going to go through this ETF. I'm going to share with you guys how it works, what it has to offer, and again, why I personally am adding it to my portfolio as of recent. So if you want to see which Vanguard ETF is my personal favorite across all the ETFs they have to offer, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So my favorite ETF that Vanguard offers, as of right now at least, is ticker symbol VIG, or the Vanguard Dividend Appreciation ETF. This ETF is ultra cheap to hold on to with an expense ratio of 0.05%. Now you could of course go and purchase every single position in VIG and basically build your own version of it for free, but to pay 0.05% and have instant exposure to what this ETF gives you is more than worth it. The ETF's yield as of right now is around 1.7%, so you're not getting all that much income generation from day one, but that's not necessarily super important because this ETF buys into different names that offer a ton of growth potential. Now it says right here in the product summary, this ETF seeks to track the performance of the S&P US Dividend Growers Index. It's passively managed full replication approach. Fund remains fully invested, large cap equity emphasizing stocks with a record of growing their dividends year over year, which is also very important. Low expenses, minimize net tracking error. Now one of the main metrics I tell every dividend investor to look into and to fully understand is dividend growth rate, or basically how much in dividends a stock or ETF pays you compared to the previous year. Now dividend growth rate is sort of one of the magical components or metrics when it comes to building a long-term portfolio, because over time, if you get paid more and more in dividend income by doing absolutely nothing, you can only imagine how that's going to compound your portfolio and your overall wealth in the future. Now, because this ETF literally has that in its product summary that emphasizes stocks with a record of growing their dividends, and the fact this ETF has dividend appreciation ETF, this ETF is already on track to offer exactly what I personally am looking for. Now, before we go through the actual holdings of this ETF and I share with you guys what's under the hood, the performance for VIG has been outstanding. Certain years it's grown a little bit faster than others, but cumulatively since 2006, it's up just shy of 500%. Now inside of VIG ETF, there's a ton of different stocks, 337 different stocks. And even though I personally do love diversification, I think I have like 55 positions in my long-term portfolio, which is way over diversified. But even for me, 337 different stocks is a ton, considering I'm used to buying SHD, which has around 100. But with the 300 plus number of stocks, this is going to offer a massive amount of diversification, especially for an investor like myself that doesn't necessarily want to check on the portfolio every single day later on in the future. For right now, I still have fun doing that. But later on during my retirement, having a ton of different names is going to be beneficial, especially like I said, if I don't want to be as actively involved in the portfolio. Now the sector breakdown also is going to be very important whenever choosing any ETF, not just VIG, but the sector breakdown is going to be 0.7% communication services, we have 6.1% consumer discretionary, we have 11.8% consumer staples, 3% energy, 22.7% financials, we have 14.4% healthcare, we have 11.4% industrials, we have 24.1% information technology, 3.7% materials, and 2.1% utilities. Now I always say this, but I'll say it again, and this is just because I know some newer investors are probably watching this, and these are things I wish I would have heard in my early days of investing, so I'm going to say it again, and I'm sorry if you've heard me say this a million times, but make sure to understand what's within the ETF before you buy into it. Like for example, if you don't want to have much exposure to financials or information technology for whatever reason, then maybe this ETF is not going to be right for you because it offers quite a bit of exposure to both those. Now on the other hand, let's say you want way more exposure to energy because it's low beta, it's sort of boring, tried and true, well this ETF is only going to give you a tiny sliver of energy. So when it comes to figuring out which ETF is right for you and your strategy, your risk tolerance and everything else, make sure you know what's inside of it. Now, speaking of what's inside VIG, we have names like Apple making up the majority of the fund, then Broadcom, JP Morgan, Microsoft, Visa, ExxonMobil, MasterCard, then we have Costco, United Health Group, and Walmart. Now, tons of these different stocks in the top 10 holdings are actually stocks that I own on their own and stocks that I'm a big fan of. More or less ultra blue chip names that have been growing over time, creating profits, and offer dividends and dividend growth and a ton of growth potential too. Now, this of course goes back to my last point. If you don't want to have much exposure to Apple, Broadcom, JP Morgan, or whatever the case might be, for example, then maybe look into a different ETF, because remember, whatever an ETF is made up of is what you're getting exposure to. Now, even though VIG doesn't offer a massive starting yield, again around 1.7% more or less, it does pay a dividend and it has been growing over time. The dividend growth for VIG has been very steady, as you can see by this bar chart right here. The dividends year after year mostly have been going up and to the right, with a few times where it's dropped a little bit, but over the last decade plus, VIG has grown their dividends pretty substantially, which has offered investors more and more cash flow, which is basically what this ETF is seeking. Now, for those of you guys that like to keep track of all the numbers, the dividend growth rate in the last 10 years is just shy of 8% the last 5, almost 10%, the last 3, 8%, and as of recent, the last 12 months, 5.3%. So not quite up there with SCHD numbers as far as dividend growth rate, but still very close to SCHD, which is sort of one of the best to do it. Now, I sort of mentioned that as I get closer and closer to maxing out my personal long-term dividend portfolio to the point to where I'm earning sort of enough dividend income, at least for now, I'm slowly buying into more growth-oriented names like VIG that not only do offer dividend income, but also offer a ton of growth potential in the long run. I mean, ever since 2009, this ETF has basically been growing straight up and to the right, with a few months here and there of drops, but every single time, for the most part, it's recovered nicely. So because of the fact that VIG is very well diversified, it's super cheap to hold on to, it offers a decent starting yield just shy of 2%, but some nice healthy dividend growth. But along with that, this ETF has grown like crazy over the last several years. This ETF, like I said, has become a part of my portfolio in the last year or so, and I do want to buy more and more shares average down, especially when we see dips in the market like we have as of recent. So now that we talked about VIG, the Vanguard Dividend Appreciation ETF, I lastly, most importantly, want to hear from you guys down below. When it comes to Vanguard ETFs across all of them, what's your personal favorite? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.